We've got the tax moves you need to make before the new year, because now is your opportunity to make sure you don't pay Uncle Sam more than you owe. On the money line, Tracy Coenen, a forensic accountant and our resident tax expert. First, Tracy, this is a pretty straightforward one, but very, very important. Make sure your name's the same on all your documents.
That's right, Carmen. One of the most basic mistakes anyone can make is to not have their name match up in the government's eyes. And so you've got people who may have gotten married, gotten divorced, or had a name change for another reason. What they need to do is update their name with the Social Security Administration so that they've got a match on all their documents. Now, hopefully their employer is up to speed and is putting the correct name on their W-2 and all that kind of stuff. If people don't do this, they're going to risk having their refunds delayed because the information is mismatched.
Yeah, and also, too, what if they pay their taxes and it doesn't match up, but that's your Social Security number? Now, Tracy, I should also take the opportunity to max out our retirement contributions. Another reason why to max those babies out.
That's right. We love those tax savings, and of course we're going to love the benefit that we have down the road when we have some money saved for retirement. And so if you haven't contributed to a traditional IRA or a Roth IRA yet, you need to start thinking about that. And most people say, well, gosh, the year's almost over. I don't have the money. Well, they've got until April 14th of 2009 to make their contribution, so they don't have to get it in yet. If their budget's a little tight, they might want to contribute a small amount each month between now and April, up to that $5,000 limit that they can contribute to an IRA.
Yeah, that's a really good point, Tracy, that you do have more time than December 31st. Now, third, Tracy, if I've got a 401k through work, right, you should see whether you can invest in the Roth as well to save more on your taxes.
That's right. Some taxpayers think that because they've got a 401k at work and they're contributing there, that's all they can do in terms of their retirement. And that's really not the case. They may still be able to contribute to a Roth IRA if they're under some income limits that the IRS has set. So they may be able to do the Roth in addition to the 401k. And even though they won't get a tax deduction this year for that Roth IRA contribution, our viewers of On the Money should know by now that those earnings are going to grow tax-free. So it's a great benefit.
We love them. Now, Tracy, if I'm itemizing, it's always good to give a little something to charity, not just out of your own heart, but it does take a little bit of the bite out of the tax bill.
That's right. You're going to be able to deduct your charitable contributions all the way up to 50% of your income if you're a really big giver to charity. But charitable contributions not only make you feel good, but do reduce that tax bill. The one thing I do tell people to make sure to do, though, is to get receipts for everything that they do contribute to charity.
Yeah, even clothing in boxes. If you donate clothing, you donate other items, you can get receipts for those as well.
Right. And typically what you'll get in that situation is just a receipt noting that you gave a box of clothes on a particular date. I tell taxpayers to make a list for themselves of what they gave to the charity, maybe 10 pairs of pants, 5 shirts, 3 sweaters.
And you got to add, you can add those up. And Tracy, just because we have to move forward, number 5, you say if you have expensive medical procedures, what's the percentage that qualifies for an itemized deduction?
Well, you can deduct your medical expenses once they exceed 7.5% of your income. Now, that's a pretty big chunk for most people, so a lot of taxpayers aren't going to get a benefit from their medical expenses.
But a lot of folks who are paying out of their pocket, though, for coverage, that maybe they apply to them. Tracy and I are continuing this conversation online, so watch our web extra at onthemoney.cnbc.com to learn more about the tax moves you need to make before the new year. We'll be right back after this.